E for MarketWizards.com and eMiniWizard.com, reminding traders to use risk capital you can afford to lose. It's about 11:15 on the 20th of February, 2019. Had a very tame, soft session that we expected. So far ahead of news. Brian had noticed a pattern of higher highs and higher lows. Absolutely correct. If you see that type of a pattern, sometimes you'll want to draw a trend line to help yourself see those ideas. There's a 1-minute chart. You want to have enough real estate to see things in context. You'd advise make sure you are paid the 82s to 85 zone. Don't even have a 10-point range yet for RTH. And the market generally is waiting, and obviously trying to anticipate news is a fool's game. You're better off to wait for it and then react. And we'd said if we got 78 to 79 and a half to hold, and above that we thought would be a potential move to the upside. Try to tackle that 82 overnight high, and then if there's anything above that, probably that 85 would be the next key idea, and make sure you're paid by that. And that reflects a conservative viewpoint on my part. And then anybody who has profits that wants to attempt a short, you're going to be using that 85 to 88, yesterday's high, that 87 and a half, as resistance. In a powerful move like a news move, you have to be more careful. You can't just close your eyes and short. You try to give it time to make its move, and then try to get into the first pullbacks are usually buyable. Or if it's a down move, sellable. And so you want to identify areas of doing business in slow markets and then in fast markets. And there's obviously a slow market right now. So this is your angels and demons, and showing our box from yesterday and how we're still inside that range type trade. And you can see how we've respected this upper end. And this is a typical, so far, inside range type day. And I would suggest anybody that typically uses our system, we say take a long lunch. Come back and save your powder, come back 1:30, 1:45, and then you look for ideas. And a reminder, if you are new to business, best thing you can do is put the mouse in the drawer and watch and observe and learn. You got to go through these for a number of times to see how they operate. And you can get some pretty good squeezes in either direction. I find usually the knee-jerk reaction is up, and then you have to be careful. Just seems to be the way they play the game. So when you drop back to a chart like a 15 RTH, you'll see that it's not perfect, but you're still above the pink line. And then you can count up, and you can, this breakout we talked about back here. And it respects the blue line, get a little bit of a sell-off, catches itself, still leaves the gap open back here. Squeeze again, got another gap. Squeeze again. Squeeze again. So it helps us with perspective. And it will definitely help filter out a lot of that noise that you see with the overnight charts. And if you're looking for gaps, then this is where you take your numbers and try to locate those on your spreadsheet and understand when they may or may not get tackled. But this is what I call the Panama Canal trade. It floated up, squeeze, floated up, squeeze. Here's that little trend line we had drawn earlier. We had talked about that 81, 80 and a half zone. And this is where I think the breakout was. Third time through trade. A little bit of profit taking. It's like threading a needle with a range this tight today. And fairly steep trend line, but you can see it. Anybody that is played for that 82 to 85 zone, and you've taken your profits and you're going to go sit down and relax at lunch and come back later, great trade if you took the support trade today to try to get to the, first of all, 78, 79 and a half, and the 82s, and no guarantee it's going to bust out. And then the 85s, and you said, enough. Got a couple of points of reward left to get the previous day's high, or a couple of points to come back the other way. And that's where risk and reward, you can, if you're rational about it, you can understand those ideas. And those are the finer points most of us forget. Just want to, hey, I entered here, I want 10 or 12 or 15 or 20 points. Market doesn't care about where you entered. You want to plot it from common sense ideas. So I wish I could say that it was a better travel range, but this is pretty much what we expected. And for those of you who took some ideas and with your own work and some of the things I've talked about, got a few points, keep them for powder for this afternoon. Best advice I can give you. And if you're new at this, just learn. Don't even bother trying to trade it this afternoon. One last look for anybody that's a profiler. And I'm trying to understand how this stuff works with my stuff. Not a big deal, because without it, I can still understand my work. But you try to add to it. And see areas of theoretical support, theoretical resistance, areas that will show up here similar to areas I look for. And I'm not the one to help teach you this stuff, believe me. There's some very good traders out there. E-mini player, I think, might use this. And obviously FT71, one of the best out there with this stuff. And I think Bomba Trader also uses a profile. And we all have our own swings, meaning relating to golf. We all have a little bit different size and tempo and nature of play. So you use what works for yourself. Simple as that. Don't try to reinvent the wheel. If what you've got is working reasonably well, then add some of these tools to what you do. See if it helps you. If not, throw them away.